effort to teach the way I look at markets and certain tools that I use. This is going to be collaborative. I'm going to ask you if you understand what I'm saying and you get it. I'll ask you to give me a why if you do, and no problem if you don't. Just say you don't. There's no such thing as a silly question, only silly answers. So you guys with me? If you have questions, feel free to go ahead and ask them. We're also going to cover what I think RSI and how you could use RSI. But I want to start off by a dose of reality that how many people are fairly new to trading? How many people in here have been trading less than a year or possibly not even trading, still on a demo account, back testing, and taking their time before they go live? Give me a why if you're with me on that. Because I'm going to divulge something, and there's a lot of hype on the internet. And what I like about Tradimo is they do not provide hype. They're giving you tools to attack a very difficult endeavor, which trading is. Anyone who tells you it's easy, you have to run away from them. And all the people out there saying that they have a secret to FX trading, that they have a secret. Do you guys know what the secret is? What's the secret to trading? What are Forex secrets, trading secrets? That's a good answer. That's a good answer. That's a great answer. That's a very good answer. The secret is there is no secret. The secret is there is no secret. The secret is hard work, spending the time, and in our business, screen time, because you can't learn experience, you have to live it. And that only happens with the passing of time, correct? So be patient with yourself and take your time. The markets will be here when you're ready. So make sure that your accounts are. How about an amen on that? Okay. So today what I'd like to start with is RSI. There are a lot of different ways people look at RSI. First of all, let's stay real basic. What does RSI stand for? What does RSI stand for? Timothy's got it. Jack's got it. Okay, so a lot of people use it for having overbought readings, oversold readings, correct? I've renamed the RSI. Okay, write down the new name of RSI. It's far from that, Brenza, but I like it. I call it the real simple implicator because of what it implies. So instead of relative strength index, the RSI to me gives me messages and what it implies. So that's what I've renamed it. I don't think Wells Wilder will mind that I have a little different take on it. So why do I call it a real simple implicator? Let's take a look at a few markets, a few examples, and I think it's going to help you understand, especially if you're tempted like me, how many people try and catch turns in the market, or how many people would say they're trend traders? Who looks for reversals, and who mainly tries to trade with the trend depending upon what time frame you classify it in? Jack will do anything and everything. Okay, I tend to be a reversal type trader. Okay, I am always really was impressed and learned a lot from the writings of Paul Tudor Jones. Anyone ever hear of Paul Tudor Jones? So we all have heroes. I grew up in the era with Paul Tudor Jones and Rich Dennis, who taught the Turtles. That's how old I am. In fact, when I started in the business, my friends, they were trading currency futures on a chalkboard. In 1976 at the CME, I was a runner and I'd take orders out, and the bid offer last was in chalk. So I've seen the whole evolution of the business from when currency futures first started trading on the IMM at the CME, and I've seen a lot. So let's talk about the RSI and what it implies. Let's start with, say for example, the 1 hour pound dollar. Okay, ignore the CCI, I use it as a confirming indicator. So here in the pound, we made a new price low. We broke down after the Fed meeting, right? See the break in the pound? Here you have what I call a confirmed low. The market went down and the momentum indicator made a new low along with price. Price and the RSI made a new low. Everyone see that? Okay. So what does that imply to me? Markets rarely bottom when they're confirming lows, and markets rarely peak when they're confirming the high. Give me why if you understand that. Because it's actionable down the line. Markets rarely bottom when momentum is confirming price, and markets rarely top when momentum is confirming the new high with a new high reading in the RSI. So what do I do with that knowledge? And there always are exceptions, but I'm talking about trading, and trading is probabilities, correct? And amen that we're trading probabilities. I like to trade probabilities rather than possibilities. Possibilities to me are weak. It means you don't know. And there's nothing wrong with saying I don't know. There's nothing wrong with saying I was wrong. A lot of people choke on those words. I want everyone here to text then and say I don't know. Get used to it, because a lot of people, this business, just like real estate, is location, location, location. I could teach you all about a method or an indicator and what it implies, but this business, unlike real estate, that's location, 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 our business is psychology, psychology, psychology. So it's important to admit when you don't know, instead of pretending to be smart, which is what I did when I was young. I would, instead of admitting I don't know, I would pretend that I did. So that's the exercise for right now. Everyone text, I don't know. And that's wisdom, okay? That's wisdom. It's foolish to pretend you know when you do, because that's going to lead you to impulsive trading. Correct? Who's with me on that? And I've seen hundreds of people trade. I used to be a commodity broker. I had my own IB. I've taught prop traders. I've run trading rooms. Good. So It's okay to say, I don't know. What do you do? What do you do when you don't know? What do you do? No. It's also a position that sometimes the right trade is no trade. And when I find myself clicking around from pair to pair, pair to pair, I'm searching for something to do instead of it hitting me in the face. So I'm a big believer that less is more. And if you don't know, that means you wait until there's enough compelling evidence, just like a good attorney. When he goes into court, he brings a lot of different evidence to build his case. So in our business, what do we call that evidence? When you have more than one thing pointing towards a probable outcome, we call that what, boy? Robot? Okay, it's confirmation with confluence. Say, for example, you have a moving average, you have a fib count, you have all these things in one area. It's a stronger case, right? It builds a case for compelling you to take risk. And then you need the mentality when you have that you would rather take that trade because of the case being built and be stopped out rather than watching it go without you. A trade has to be compelling enough that you're willing to say, okay, market, prove me wrong. I'm not going to be afraid to take this trade. Prove me wrong because I have conviction that I'm right and I'm not going to watch it go without me. That's a samurai warrior mentality, that you would rather lose a little bit of money than see a trade that you've worked out and that you've planned happen without you. Again, psychology. If you're coming off a loss, you might hesitate. But just like great quarterbacks, it helps to forget the last trade, no looking back now, and taking the next one. So, who agrees with that psychology? So, I know I rambled a little bit here, but let's get back to the pound. So, here we have a confirmed low. So, what is the likelihood, what is the implication of a confirmed low? Anyone want to guess? So we confirmed the low and bounced. What's the implication? If markets rarely bottom when you have a confirmed low, what's a possible market outcome here in the pound? That's right, robot. That's right, robot. That may or may not confirm. You know, we could still get A, B, C before we make a new low, but I hardly believe that this is going to be the low in the move. So there'll be a new low, Adam. You don't know at this time whether it will confirm or not. So but we do believe because we have a low, we're not sure if it's going to diverge or confirm, but we have some information here knowing that we have a confirmed low that should the market bounce, that it makes sense to sell that rally because it's a confirmed low. A higher probability of another low than, say, for example, you had the opposite. Let's go to what the pound did last Friday at the top. Okay, confirmed high, and then we started to diverge in the pound, right? So as we started to diverge here, the probability of a new high was lessened. Okay, this was our last confirmed high. Look what happened Friday. Look at that glaring divergence. So what's the implication of non-confirmations? We know what the implications are for confirmed highs. Here we had a confirmed high in the pound off this initial blast, right? We corrected and we made new highs. We were confirming. We pulled back. We were confirming, and then we started to diverge here. So your first divergence really showed up here at 166.40. Okay? And the final high being 66.67. So just like confirmed highs and lows imply another high or low, when you begin to diverge, it's not necessarily a reversal signal, but it should tell you at the minimum that you should not be long anymore. Correct? Does everyone see that? Okay, now my preference is for reversals. Okay, so we've got this covered on the divergence that we had up here. This was our last confirmed high, and then we started diverging here. Final divergence here. And then the big decline that we had Friday. My preference for top picking, and it ties in with a 3-drive formation, a 3-drive to a top, 3-drive to a bottom formation, is not to wait for, I like to see at least 2 divergences under the 70 level before I'm willing to counter trend trade it. So that's a rule. I don't get short on the first divergence, which was here. I might have done it here. This was a second. This was actually the third divergence. So the longer it takes for a divergence to occur, I like at least 2 divergences before I go ahead and counter trend, top pick a trade. Give me a Y if you're with me. And the ideal reading is under 70 for shorts. Give me a Y if you're understanding it. So the ideal is to wait for more than 1 divergence, to wait for 2, and your higher probability short setups are going to happen when the RSI is under 70. Because over 70 is saying that there's still too much momentum in my mind. That's my rule. Everyone get it? So let's take a look at some of the markets and what's happening here right now. What do we have going on in the euro right now? What kind of lows have we been getting here in the euro? What kind of low is this on the 1-hour chart? On the 4-hour chart? That's right. So what does that imply? I'm not saying that we can't rally back here to 580, but it implies that we're nowhere near a bottom, right? That rallies still need to be sold because we don't have 1 divergence here. And if you were looking for divergence, you had 1 here, and it worked for a trade. But what's our rule? How many divergences do we have to wait for before we're going to take it? That's right. So having that rule filtered you out, because the next time we made a new low down here, we confirmed the low, didn't we? We bounced and we're still confirming lows. So do you understand why I've renamed it the real simple implicator? Because my interest is not if a market is overbought or oversold and I'm going to sell it over 70 or 80 and buy it under 30 or 20. What I'm looking for is the market message on the RSI. What is the RSI saying? What is it? Is it confirming or is it not confirming? Those are the two messages that I look for in RSI. Have you guys ever been taught this before? Give me a watch. And it doesn't sound real complicated, but it's going to give you an idea whether or not you should be looking for corrections for the trend to continue. If you're looking for a continuation of the downtrend, you want confirmed lows and then sell the rally. If you're getting a divergent low, it's telling you, you know what, we shouldn't be short anymore, and now we should start to become alert for a potential reversal. Have you ever heard about this stuff before? And I'll tell you what else you have. Good. All right, so it's not anything that I invented. All right, there, as Solomon says, there's nothing new under the sun, but there are a lot of times we don't pay attention to it, and it's actionable. Okay, so implied confirmed highs tell me the next time there's a pullback, perhaps I'll use a fib pullback or a moving average, I should be a buyer. And the fact that we're having confirmed lows in the euro tells me if the euro pops, I don't think I'm missing a bottom. It's a selling opportunity for me. So it's always important to ask yourself, are these highs or lows being confirmed, or are they beginning to diverge? That will set you up for which side of the market you want to be paying attention to using your other triggers and methods. Okay. So we had a similar setup before this S&P rally that is happening in earnest today. Here was a big break last week. What kind of low was it? All right, we bounced. What should we have been looking to do on a bounce? What kind of low was this? It made a new low. Okay, so it said to do what? It's only your first divergence, right? What do? You cover your short, right? You cover your short. You're not short anymore. Okay, but if you use this rally to sell, it said this is a good time to cover my short. It's not confirming. But what's wrong with this setup? Even though it's the first divergence. What's wrong with that setup? The RSI reading is 23. There you go. Adam's got it. That's right. 23. So, I mean, this wasn't exactly classic, but it was smart to cover your shorts because there was a momentum divergence. Because if you covered your shorts, you avoided this, right? So we know we have one divergence, right? So then we start heading down. And these are not exactly textbook, but it was a divergence, a shade under my 30 at 27 right here, still a higher reading than 24. And something else that you want to tie in with this, and this is why I wait for two divergences, is something called a three drive formation. Who's used three drive formations before? Anybody? Boy Robot has. I learned about that from J.R. Hill in the 70s. What is special about the number 3, Robot? What's special about the number 3? It's a number of completion. It's a number of completion. If you play baseball, 3 strikes, you're out. If you're a hockey player, everyone wants a hat trick. The Earth is the third planet from the sun. Culturally, people say the third time is a charm. Spiritually, the Godhead is 3 persons in one. So the number 3 is a number of completion, and so it ties in with my RSI work. I'll show you a few examples. Let's go back to the gold at the recent high. Here it was. Watch this. 1, confirmed high. This is gold before the recent high. Okay, here's 1. Look at that reading. That's a pretty strong market, isn't it? 8240 RSI reading. So if I knew we had a confirmed high, I'm looking to buy the pullback because they're, the implications and the probabilities for another one, right? Here's your second. RSI reading under 84. So this is what kind of high? Is this a confirmed high or a divergence? Okay. But it's only your first one. Okay. So we had a pullback. And then what did we have here? Our second divergence. Not exactly ideal because it was over 70, 73 reading, but I went with the formation, and then your first candle down was your signal. Look at this. 3 drives to a top. 3 drives to a top. So now let's take a more recent example of something that's happening right now. Here's USDCAD. Everyone loves it. What kind of high was this in the Canadian here? Right. Which said buy the next pullback and look for what? Here's your second high. What kind of high was that? Right. Had a nice pullback, right? Here's your third drive. What kind of high was that? And was that your second divergence? No what? Yeah, second divergence. This was your first pullback. Here's your second divergence. You take the first down candle, signal, stops over the high, and looks like we could be on the verge of breaking down of a rising wedge. I also correlate the Canadian a lot with what's happening in the energy market, and the crude oil market looks pretty good to me. We've had a nice pop in crude, but the main point being employing 2 methods here, looking for 3 drives. We've seen an example of 3 drives to a top. Now I'll give you an example of what might be potentially setting up as a 3 drive to a bottom in Euro Yen right here. And sometimes your last drive, within the third drive, you don't understand the second. This one, it's a divergence. And then this one, okay, what don't you understand? It's diverging. That doesn't matter. The key point is it's diverging from this high twice. Yeah, this reading was what? 64.94, and this reading was 65.49. The first peak is the reference. Or the first low is the reference. But you're right, you could talk yourself out of it. Well, it's higher than this. But to me, it's from the previous high. So we've made 2 successive new price highs without the confirmed high being blown out by the RSI. Okay. And what do we have here? What kind of formation do we have here? This is textbook. I'm not saying we can't probe the upside one more time, but what kind of formation is this on the 1 hour USD-CAD chart? You guys know technical formation. That's right. What kind of wedge? Rising. Should it break down? Renner and Robot? How much do wedges retrace? 38%, 50%, 61.8. It's good to know. Anyone know? 100%. So the implied target is the bottom of the wedge. Wedges can retrace 100%. That's why there's such bearish formations. I'm not saying that we can't have pit stops at, this moving average before that happens. Example in a chart. You'll find them everywhere. Let me look for a wedge. The guppy. Guppy was a rising wedge, and we nailed this divergence in the guppy. So, rising wedge. We're going to take this low out eventually. We've almost retraced 100% of it. Okay, you'll find multiple examples of wedges retracing 100% of the move. Who's afraid of missing trades? Who's afraid of missing trades? Good. It's one of my shortcomings. You've got the right temperament, Renner. I miss trades every day. Why is it okay to miss trades? Why is it okay? That's right. Always another bus. You know, avoiding bad trades, Adam, is more important than being in good trades. And it doesn't show up in your account when you avoid a bad trade, does it? Doesn't show up in your account, but it's pretty important. So let me ask everyone here, do you have the drift on what I teach about RSI? What do you think of the real simple implicator? Who could spit back the rules to me? It works on all time frames. Normally it'll show up on longer time frames first, like this one. Look at the EURUSD up here at the highs last week, EURUSD. But what bothered me about it is we still had a confirmed high up here. So perhaps there is one more push up in EURUSD. I didn't take the trade because of why. So I had it on the daily. You want to go long on the next pullback, Adam. You don't want to buy the confirmed high. So far, we've had two drives here. So there are exceptions. Maybe this was a top. But I am looking for a significant top in EURUSD. We had glaring divergence up here in the daily. This is your second divergence on the weekly. And I think that we could be looking at the head of an eventual head and shoulders top in EURUSD. Yeah, buy the retracement, Adam, after a confirmed high. Use your fibs and moving averages to buy the next pullback, anticipating another high to come that may or may not be confirmed. Capiche, bro? Okay. That's good. I want you guys to get it. So anyway, I think this is going to be a big trade. EURUSD, I think this is going to be a campaign trade of mine. Eventually, I see us trading down towards a 140 level. This is a neckline. Then perhaps we get another rally. Longer term, I'm looking for 125 on EURUSD. So that's my Nostra Pinkert call. Yeah, on the daily it is. On the weekly, these are a little bit too spread apart, but yeah, you could say this was a 3 drive. On the daily, it just looks like a false breakout and a failure. But the 4-hour has kept me out of the trade. So ideally, what I'd like to see is one more push up in EURUSD on the 4-hour, and I want to see the RSI. Would have to do it a couple times. Under what number? I believe even on the 1-hour we were confirming up there. And there was a little divergence, but way over 70. So that's my view on EURUSD. I'm sorry the gardeners have arrived. Can everyone still hear me? Okay. So I want to ask if you guys have any questions about what I've demonstrated to you today. Give me a Y if you learned something new today. So another tool to put in your another quill in your arsenal. Okay. Any questions before I say goodbye? Anyone else? Any pairs that you would like me to take a look at for you? I'm willing to do that. Okay, we're going to use confirmed highs and confirmed lows for positioning ourselves for another low or another high to come. We're going to wait for two divergences, ideally for turning points for 3 drives, divergences at the bottom. You're going to have 2 divergences with the reading above 30. If you're going to be top picking, you want the RSI to diverge not once but twice, ideally beneath 70 for the second divergence. Does that help? For recap? Also, you guys, you know what? We have to be tough and we have to be resilient. And as Jake Bernstein said, the key to success is stick-to-itiveness, but also be flexible. One of my favorite expressions is by W.D. Gann, if you don't learn how to change your mind, you won't have any change left. But we all do have to be tough. And I think Rocky Balboa had the right spirit. I don't know what happened to that. I don't know what happened to it. There we are. Eye of the tiger, right? Come on, Janet Yellen. So I want to thank everyone for their attention today. Thank you for welcoming me. Thank you, Jack. Nice to meet all of you. Hope I've added some value to your experience here at Tradimo. And next week we'll do more on-the-spot analysis about where I think markets are going and integrate what I taught today with current market setups. How does that sound? Good luck to everyone. Good hunting. Remember, don't just count your pips, count your blessings. And money comes and goes. Time is gone forever. Make it count. Nice to meet every one of you. Thank you, Jack.